Welcome to Tech Business Solutions with your host, Steve Crisfalusi, retired CEO and currently the senior consultant with SJK Group. He and his guests will discuss how local businesses in a variety of industries apply different technologies to be more productive, automated, and profitable. And now your host, Steve Crisfalusi.
I'm Steve Crisfalusi. Welcome to Tech Business Solutions, the show where we discuss how different technologies can be applied to businesses within our community to help them be more productive, automated, and profitable. Our topic today is technology in the mortgage and finance industry, and our special guest in our studio is Mr. Jeff Steed, President of Encompass Group. Encompass Group consists of Schmidt Mortgage, Atlas Mortgage, and Consumers Insurance Agency, which provides both mortgage and finance services in the state of Ohio and the surrounding states. Welcome, Jeff. How are you today?
Terrific, Steve.
Glad you're here. Jeff, timeliness in the mortgage finance industry is a critical aspect. As a homeowner myself, I know the processing time for a mortgage and approval can seem like eons. I'm interested to hear how technology has helped impact that time aspect of things. And if you can share with us over the last 10 years, how has technology improved your business?
Well, I think the biggest improvements have come probably under the categories of productivity and speed. 10 years ago, it probably took 60 days from the day you started that process of buying a home or refinancing a home until the transaction was closed. Today, that process has been reduced to probably 14 to 21 days in the most. The amount of reproducing of data, when you've closed your transaction, you're signing a stack of papers that's probably 2 inches thick. Years ago, 10, 15 years ago, that was done on typewriters and carbon paper, and every data element was retyped. Now, based on the early stages of incorporating technology into our business, the data processing systems now reproduce all of that. That has increased productivity tremendously, and the speed by which we can now close that transaction has benefited the customer as well as the company and ultimately reduced costs.
Very good. Let's talk a little bit further about the customer. Obviously, the timeliness aspect involving the technology has reduced that, which helps everyone. But are there other ways that the customer has benefited from the use of technology in your industry?
I'd say convenience and consistency are probably the ways the consumer has benefited the most. From the time you apply for that mortgage loan, you don't really know how much work is going on in all that dead time behind the scenes. But the convenience element now is such that you could apply on the internet at home at a time of your choosing. You can get a response back, certainly, if not immediately, with the next day. If a lending consultant from our shop came to your home, they'd come with a laptop. They would certainly have all of the information at their fingertips to help you pick the right product and probably tell you right then if you qualified for the loan. So the consistency aspect comes also from the incorporation of artificial intelligence in many different aspects of making that credit decision, so that if you applied for a loan today, you could be pretty confident that if your circumstances haven't changed from a year ago or a year from now, you're going to get a same consistent sort of qualification and the product that meets your changing needs, but a consistent credit decision.
So what I heard is that it helps, the technology has helped your company internally from productivity standpoint, timeliness, to the customer, online capabilities from that direction of application or whatever. And I also understand that you use technology today for training of new staff and personnel. where you've condensed that time period. We talked briefly about that earlier.
Training has been one of the biggest challenges for our industry because every individual borrower's application is different. Their individual borrowers' circumstances are different, their objectives are different, and training personnel to know the products and assess that borrower's individual objectives used to be a very long, time-consuming process. And the old adage used to be, well, if you're here long enough, a year or so, you'll figure it out. Well, not anymore. Utilizing the internet, using web-based training, using teleconferencing, we are able to take loan officers of any experience level, put them through an intensive week or two training program, and monitor their performance in that training program using systems that will grade their scores and provide information to them in a very short period of time to make them serve our customers better. In addition to that, if they did come to your home, for example, with a laptop, all of the programs are already in a database where they can put in your qualifications and actually get back a variety of programs that you would qualify for on the spot, thus again assisting them in the ability to put you in the right program.
Right. Let's talk a little bit about artificial intelligence. You and I have, again, had some discussions about that previously, and you mentioned it here on the show. I think most people, including myself, think of artificial intelligence being in robotics, biochem industries, but I don't really relate it to the mortgage finance industry. How is artificial intelligence being used in the industry?
Well, there are really three categories, and the most common one that most people would understand is the credit score. Everybody seems to now know what their credit score is, and they're always asked that, and they understand that it has something to do with their ability to obtain a loan. Well, what credit scoring has done is taken a number of factors based on the history of an individual's use of credit, and it's translated that into a number that really is a predictor of that individual's ability to repay that loan.
So the artificial intelligence is actually starting to do some of the analysis.
Absolutely, and that leads into then the second biggest component, which is the credit decision itself. Outside of the credit score, you're still looking at various factors in an individual's unique situation. What do they earn? How long have they been on the job? How long have they lived where they have? Did they rent? Do they own? What are their assets? Numerous factors, and artificial intelligence has now come into play to analyze all of those factors and compare it to the credit score, and again reach that consistency level of determining that someone qualifies for a loan and has a high likelihood of repaying that loan.
Right.
And there's actually a third category that really comes into play, which is over the years, and particularly in these heavy refinance period that we've just come through in the last 3 or 4 years, determining the value of your home. The databases that have been amassed out there based on zip code and neighborhoods of what is an average value or a normal value for that home brings the appraisal element in, utilizing artificial intelligence. So artificial intelligence is a significant factor.
Let's talk about your company a little bit from a technology standpoint internally. You have a server network with multiple locations. Obviously, that creates a communication challenge amongst your people and variety of resources there. How has technology helped your people better communicate both internally and externally?
Well, it goes back to that paper-intensive nature of our industry. We have remote branches as far away as Arizona. We have 7 here in Ohio. And every borrower that comes through gets that same 2-inch stack of paper produced. Now we can utilize the internet, we can use scanning of documents, moving the information between a branch and a centralized location much quicker. We can conduct certainly management meetings on an online basis. We can use teleconferencing for sharing of information. Again, all of it. The fax machine used to be the mortgage industry's best friend. It's all but eliminate it. Now, utilizing technology to move these documents in an electronic format, and again, increase speed and reduce costs.
Right. Let me talk a little bit about security and confidentiality. Obviously, everyone today is concerned, especially online, about the security of their data and information. How does your company, Encompass Group, work towards ensuring that those aspects?
Well, security is a top priority for us. There's no doubt. I mean, people are giving us extremely personal information, and it's our responsibility and our legal obligation to protect that information. Firewall systems, redundant firewall systems, tape backups, hard drive backups, secured access, different levels of security codes for people to access different information, and then the destruction of that data. It's a fairly costly endeavor, but it's of top priority, and it's critical for us to be entrusted with that data and ensure that it has privacy and is not going to be accessed by inappropriate individuals.
And I think you're absolutely correct there, where, in my opinion, most reputable firms go to great extents to protect and ensure the confidentiality of any data from an electronic standpoint to the best of their ability. What advice would you like to give business owners out there in general and or specifically owners of businesses in the mortgage finance industry in relationship to utilization of technology?
Well, we have found so many different uses for technology to better serve our customer, and what we came to grips with was the transaction that we, particularly in the mortgage side of the business, that we offer is the single largest investment most people will make. And we realize that there are a lot of people that are very comfortable on the internet in an electronic environment, but a majority of our customers still want to deal with someone face-to-face. So I guess my advice would be to utilize technology in every fashion you can to make your staff better educated, to provide a faster service to your customer. And even though we provide a mortgage product, we are a service-oriented business.
Would you recommend that a business owner start looking at or incorporating technology into their actual business plan?
Oh, absolutely. I couldn't imagine in this day and age how you could not. You're going to reduce costs, you're going to provide a better service to your customer, and we are in an information age, and you have to access it and you have to produce it rapidly.
Well, Jeff, I think congratulations are in order for you and your businesses. You've embraced the technology. It appears that obviously you're well taking advantage of it, and both you and your people and your customers benefit from that. And we appreciate your time and advice. And we will be right back after the break. Don't go away.
Thanks, Steve.
Thank you, Jeff.
With EDS, or electronic data storage, you can drastically reduce or eliminate some operating costs and almost immediately improve your bottom line. EDS will help you save money, reduce toner and ink usage, extend the life of your printer's fax machines, reduce the need for storage space, and centralize all of your data, making it easier to share and locate files.
Welcome back to Tech Business Solutions. Our next topic is taking advantage of email within your business. And in our studio today is our special guest, Mr. John Cole. John is the owner of Product Risk Reduction Incorporated that was established in 1985, and they are a manufacturer's representative for multiple fastener manufacturers globally. They manufacture special bolts primarily for the construction, bridge, and heavy equipment industry. Welcome, John. How are you today?
Very good, thank you.
Good.